you can always find opportunities in any market. We wanted something that was really going to drive diversified employment. That's what we were looking for, because we figured with diversified employment, you're going to get a growing rental base. You're going to have ability to reposition old stock. And when you're looking in secondary markets, typically you don't have the same velocity of new construction and whatnot. So that's been a fun one. We've accumulated quite a number of units in Ontario and having fun and growing and looking at the future of that being probably value add and redevelopment of those things. So suffice to say, that's a couple of a number, but it is opportunistic and it comes back to people. That's kind of how I adjudicate my
Very
investments.
cool. Very cool.
Hey everyone, thanks for tuning into the Canadian Private Lenders Podcast, a show covering the private lending industry, the mortgage broker space, and the Canadian economy. Your hosts are Neil Andrino and Ryan McNeil. Enjoy.
All right, everybody, welcome back. It's episode 63 of the Canadian Private Lenders Podcast with your host, Ryan. And I'm actually solo today without our co-host, Neil. Neil is away enjoying some holidays over the Christmas time here. But fortunately for you, the listener, you won't have to listen to me ramble on for 30, 45 minutes here because we've got a very special guest today. We're thrilled to welcome Charles Ackerman, who's the president and co-founder of Novillo Capital, which is an Atlantic Canadian private equity and consulting firm. He's a proud graduate of St. Mary's University here in Halifax with a background in business and accounting. Charles brings a wealth of experience to the table. His diverse career spans ownership of several businesses and serving on the boards of prominent Canadian companies. At Novillo Capital, Charles employs a dynamic strategy that includes real estate investments, both through direct ownership and private mortgage lending. His unique insights in the world of private equity and lending should make for an awesome discussion in today's episode. Charles, welcome to the podcast.
Thanks for having me. Excited to be here.
Great to have you, man. I'm super excited to get your perspective. Obviously, you know, you're involved in real estate investing, but also lending on the private lending side, which is obviously a big focus of our podcast here. And I think you're actually the first investor we've had on. We've had a lot of people in the space, real estate investors, brokers, but it's going to be cool to get an actual investor's perspective here. So should be a good one.
I'm privileged.
Yes,
privileged
sir.
to be here.
Yes, sir. Yes, sir. So let's go way back to the start. So let's talk a bit about your background. I'm pretty sure you grew up in Atlantic Canada, did you not?
Yeah, born and raised in Halifax, and super passionate about Halifax, passionate about Nova Scotia and Atlantic Canada. And I think that evolved over the years. After 4 great years at St. Mary's, as you mentioned, went on to do my accounting designation, my CA, CPA. Ended up doing that with a small firm here in Halifax, which in hindsight was a great place to do it. Got to work with some really great entrepreneurs, got to see a bunch of different businesses and really understand a lot of the things that make businesses and investments tick. During that time, though, I also had a lot of friends that graduated from St. Mary's and went on to into accounting. And a lot of them did go to, at that time, into the oil and gas industry out in Calgary, doing accounting out there and into Toronto. Over the years, when I was finishing up my designation, all of a sudden friends wanted to start coming back to Atlantic Canada. Yeah. So I think when I graduated, I was always a little remiss that I didn't go somewhere else. But then in hindsight, I think staying in Atlantic Canada gave me a unique opportunity to make some connections that would ultimately have a huge impact on my career and still do to this day. Fortunately, as I kind of progressed through from a small accounting firm, spent some time at a national accounting firm, and then ultimately left accounting in 2015, started working with some businesses that gave me an opportunity to work across the country in Toronto and Vancouver and in the States. And as I got to do more of that and see more of the rest of the world, if you will, it just reaffirmed how fortunate I was to be in Atlantic Canada. Sure. And that really cemented my desire to stay here, build businesses and opportunities here, but beyond as well. So in hindsight, I'm really glad that I stayed and definitely more passionate about living here than I ever have been.
Yeah, no, that's really cool. And to your point, I mean, I'm likely a couple years older than you, but in our general age group, like you said, many people went off to Alberta or went off to Ontario. I was one of them. I lived in Ontario for 10 years. And because that's where the grass was greener out there. There was more opportunity, right? But times have certainly changed. And it's very interesting to see someone like yourself who's had success in entrepreneurship while maintaining here. I know you've got connections across the country that have led to that as well. But having this as home base is certainly really cool to see. On that note, have you always been involved in entrepreneurship? Is that something you had like even before like your university days, or was this the goal, or had you originally planned it to get the CA and work a career in Baker Tilly or Grant Thornton for 30, 40 years?
I'm not sure. I'm sure some of the partners and folks that I worked for at the accounting firm would laugh at this, but I don't think I was ever cut out to be at the firm forever. Wonderful place, one of the best places to learn. You're surrounded by so many intelligent, driven people, colleagues, clients, etc. It's a great place to be. I do think that I definitely had the desire in university, the curiosity about business and about what else you could do. Accounting, fortunately, I had a great professor, Nikki Young at St. Mary's, that I would say somewhat talked me into doing accounting.
Mm-hmm.
And I think a lot of that was because she felt, I probably was entrepreneurial, but having a robust understanding of the quantitative aspect of business was going to be really important. And,
Sure.
and in hindsight, it was definitely formative. So I always had a curiosity about entrepreneurship, about growing things, about being involved with businesses changing. And I was always really driven and competitive. I think what bridged accounting to entrepreneurship for me really succinctly was I had this fella that I knew when I was going through university, and he had gone to St. Mary's years before me. And I think I was going in my second year trying to figure out what I wanted to major in. And I knew he had done accounting, but I didn't really know what. And he was really successful. Candidly, he drove a really nice car at the golf course that I worked at. So,
Yeah.
as a young guy, that seemed like a great barometer of success. So I asked him, I said, what did you do? I think he went to St. Mary's. And he said, yeah. He said, I went to St. Mary's, did accounting, did my CA, and then went into industry and went to work for this fiberglass company, became the controller, became the general manager, bought the business, ran it, and then sold it. And I was like, geez, I didn't know accountants could do that. I had this very stereotypical vision of accountants, but I think I found that really exciting. And I saw accounting and finance as an enabler of that, a part of acquiring, growing, changing businesses and investments. So I think that summarizes it. He had a great saying too. He said, accounting, he's like, do you like sports? Are you competitive? Yeah. He's like, well, if business was a sport, accounting would be the score. Pretty hard to win the game if you don't know the score. And that resonated.
Geez, that's a good one.
So I think I always did have the entrepreneurial drive, but it was really, working with entrepreneurs at the accounting firm really helped highlight that. I loved advising clients. I loved working with clients. It was rewarding to create. You could see the value we're creating really tangibly. But I also had a curiosity of, well, what happens after that? And what about the human resources that you need? And what are the other facets of the business? I was risk tolerant. And fortunately, again, I think I had some really important and great mentors along the way that kind of gave that confidence, and maybe touch on that more a little bit later. But I think it was always there, and just had the opportunity and jumped at it when I left the firm in 2015.
Very cool. Before we started recording here, we were talking about, some of the importance of diversity of different backgrounds and so on from an educational perspective. And, Neil and I both came from engineering backgrounds and of course, into business and entrepreneurship. Of course, you've come from an accounting background. I wouldn't say those are the most common backgrounds to lead into entrepreneurship, but I am curious, is that something you've seen other people you graduated with move into entrepreneurship, or do you say it's more rare from an accounting background?
Yeah, it's a great question. I definitely don't think it's uncommon to see accountants move into entrepreneurship. I think the age at which they do it is getting younger and younger. Like I think I was pretty early leaving the firm.
Sure.
And I think a lot of folks wait a little bit longer because it is a great place to learn, and you maybe find a niche that you like, whether it's an industry or a specific business opportunity. But I find now at this stage, I absolutely do have more and more folks that I went through the program with leaving and getting into running businesses. I think that speaks a little bit just specifically to Atlantic Canada. There's been talk since I got into accounting about, this wave of businesses that are going to transition.
Sure.
And this isn't unique to Atlantic Canada. This is a Canadian, North American thing. baby boomers retiring and succession and family businesses not transitioning to the next generation.
Sure.
That's a big trend. So I think I'm bullish on more and more folks from different backgrounds, accounting, engineering, perhaps, traditionally professional or technical backgrounds,
Yep.
getting into businesses, whether they have specific industry experience or not. I think that certainly from the accounting program, the biggest thing I took from it was critical thinking, problem solving,
Yep.
the ability to work with other people, and I think an appreciation for working with other smart people.
Yep.
I think that, those are good things to have in all businesses.
Absolutely.
So yeah, I do see that as a trend that we'll continue to see more and more accountants, engineers, lawyers, et cetera, getting into industry. And
Yeah.
I think our generation, there's more change that happens, both good and bad.
Yeah.
But there's a bit of a restlessness with our generation.
Totally.
So there's a desire to do different things. Lifestyle is a big influence on that too.
Yeah, that coupled with a couple economic hiccups that we've faced in our lives so far that have led to more people maybe getting frustrated, and then deciding to go off on their own, which is a really cool trend that we're seeing recently.
Yeah.
Before we dive into private mortgages, I want to talk a bit about your real estate investment portfolio. So, can you kind of talk about how you evaluate investment opportunities in terms of the property you're looking for? Is it res property, multi-unit, commercial? And I'm not sure if you want to let the secret out on some of the locations you invest in, but I'll leave that to you, Chuck.
Sure. I would summarize it probably appropriately vaguely that I'm an opportunistic real estate investor. It starts the same way I look at any, whether it's real estate, business, any sort of investment. It all starts with the people involved. Everything I do has partners involved. In some cases, it's financial partners. In some cases, it's industry partners somewheres in between. But everything I do has partners. And I think that's just part of my investment kind of ethos is more heads are better than less. You can't see everything at once. And I'm a big believer that it's really fun and rewarding to both win with partners. You have someone to celebrate with.
Yep.
But when you have challenges, losses, struggles, it's a lot easier to go through if you've got other smart people at the table that are driven, vested, and paddling the canoe with you, so to speak. So I think that's where it starts as far as getting into some of the more technical aspects. Agnostic as far as, is it a cash flowing property? Is it a construction property? Is it a stabilized property that you're value adding to? I like to see upside in it, whether it's, in any of those facets, like to see upside, like to understand the required resources, people, capital, location, trades, etc. So really it's, is there in a reasonable period of time, 1 to 5 years, can we generate a significant return? And anecdotally, we usually we want to be 20, 25, 30% IRR. But that's really a barometer because there's a lot of things that can obviously change between here and there. But we like to underwrite based on that. So I would say, again, I wouldn't be an accountant if I didn't dial my investment thesis back to some quantitative analysis.
Sure.
But a couple examples of projects and real estate investments. I'll give a couple, one's in downtown Halifax, and it's a repositioning of an existing office building into multi-residential. Very big project. I think it is the largest repositioning of an office asset to resi in Halifax, to my knowledge. That project was certainly not my brainchild, but early on, got involved with the developers that were leading it. Really impressive folks, very clear vision, very clear experience to execute on a project like that, and a lot of intrinsic value. I believed in Halifax, believe in downtown Halifax, and really viewed that as a de-risk project. One of the most challenging things at the time a few years ago, and probably still is in Halifax, is getting it up out to the ground, the form work. And this was already done. We had the shell. So, that was an exciting project that is now very close to being tenant ready, and we'll have folks living there next year, which is exciting. It's a unique project in Halifax. The finished product so far looks great. But again, it was people, it was timing, it was an opportunity with a clear start and finish and the resources to get it done. So that's been a great project. Another one that's probably a bit longer term is, and this would have kind of been 2 or 3 years ago we started doing this, was with a couple partners as well, looking at secondary markets in Ontario.
Yeah.
And again, we were looking for markets that had economic drivers. So you can always find opportunities in any market. We wanted something that was really going to drive diversified employment. That's what we were looking for, because we figured with diversified employment, you're going to get a growing rental base. You're going to have ability to reposition old stock. And when you're looking in secondary markets, typically you don't have the same velocity of new construction and whatnot. So that's been a fun one. We've accumulated quite a number of units in Ontario and having fun and growing and looking at the future of that being probably value add and redevelopment of those things. So, I guess suffice to say that's a couple of a number, but it is opportunistic and it comes back to people. I really look at every deal as a one-of and understand it. And obviously there's lots of commonalities that you look at when you look at deals, but I try to look at it with a blank piece of paper and understand what is this specific investment thesis? What's this timeline? What's the risk and what's the appropriate return? And does it excite me? Do I like the people that are involved? Do I trust them? And can I be a good partner to them? Can I add something to it? So that's kind of how I adjudicate my
Very
investments.
Cool. Very cool. So, I mean, obviously we've seen in the past several years, difficult to get deals to pencil, obviously in the urban areas, the Halifaxes, Toronto, Vancouver, of course. So we were seeing the trend, like you mentioned, of going into more rural areas or surrounding areas to these bigger centers. Do you think that trend's going to continue in the long term, or do you think we're going to find our way back to affordability into those urban centers?
Yeah, that's a great question. I believe in urbanization. I do think that we will have affordability in urban areas. I think that the last few years have been an extraordinary situation in Canada where we had huge population growth. We had a fundamentally constrained and I would argue weak development program of skilled trades. And I think that issue really compounded things when you then inject a lot of very high leverage debt into the construction cycle and you incentivize developers to build things. Well, lo and behold, they're going to build them and they're going to build them as quick as they possibly can. The challenge becomes the only other lever there when you've got a constrained supply chain is price. And so we've seen price go up. And I'm biased. I live in Halifax, fortunate to live in downtown Halifax in a beautiful apartment. And so I'm biased. I think that everyone should get to live in downtown Halifax or wherever they want in a nice place. I think our slice of Canada is awesome. And so I want other people to experience that, but I also appreciate it's really expensive and it's challenging. And so I'm encouraged by a few things. I think that there is a push to produce more skilled trades. And I think, frankly, there's more incentive for folks coming out of high school and things like that now to look at the trades as a viable option, where at one time it was seen as maybe this isn't as lucrative of a career path. I think it is. And I think there was a lot of catch up that happened over the last few years. So I think as that happens, I think we're probably overcorrecting on the immigration and the population side. That makes me a little nervous. I mean, I think for sure some adjustment and some throttling was required there. I think we're probably overcorrecting, just like we do with the interest rates.
Seems to be a trend. I was just going to say,
it's a big trend. I think people coming to the country, our country, motivated, passionate, want to be here. I think they bring a lot of vibrancy to the country and it's super important. So, but the reality is throttling that incoming supply of people is going to create more vacancy and therefore reduce price a bit. So I do think those things coupled over the next 2 or 3 years, and you're already starting to hear kind of anecdotally that rents are softening, and I don't see a pullback on rents as much as I do a plateauing.
Yeah, flattening, for sure.
But I do think costs, therefore, of the cost of construction to build things, I think is going to plateau as well. And therefore, I think costs will kind of stabilize for new construction in the future. That takes time, though. You look at the development pipeline. I think that's a 2 or 3 year problem before we start to see a bit more affordability in urban areas, at least.
Yeah, cool. So let's pivot and talk about Novillo here. So you guys act as a wealth advisor for family offices. Can you kind of talk about what that entails? And I know you've talked about maybe the generational trend of businesses being handed down and maybe not staying within a family. Do you guys look at that as a type of investment opportunity, or is it exclusively alternative investments, or kind of walk us through what you guys are looking for with in growing your business?
Yeah, I would group it into two buckets from an investment standpoint: private equity and then alternative investments. The private equity piece very much is that. It's the genesis of our private equity strategy was really, we think that there's a tremendous number of great Atlantic Canadian businesses that are very traditional, family-owned businesses that are going to transition, and maybe they have internal succession, but probably not. Maybe they have family succession, but probably not. We're from Atlantic Canada. We're passionate about the industry, about the businesses. We know the people and market really well, and we're hands-on with the businesses we get involved with. So maybe that would differentiate from some other forms of private equity where we'll actually go in and work alongside management and really try to maintain the legacy of the business. But our big motivation is to grow it. And I think Atlantic Canadian businesses, it's so important. A lot of people say if you're not growing, you're dying. And I think that's a fine line, because some businesses are not meant to be billion-dollar companies, but they play a really important part in the value chain locally and kind of abroad. So, yeah, we look for great Atlantic Canadian businesses that ideally have the ability to grow outside of the Atlantic borders and export a product or service elsewhere, or the ability to expand and acquire a business elsewhere doing it, and kind of bring that knowledge, expertise, and capital back to Atlantic Canada. That's kind of the thesis. Within that, we're certainly, it's an opportunistic mandate. I say we stay away from restaurants and hotels, but somewheres along the daisy chain, those have been involved too. So we look at all sorts of stuff.
Yeah. We also stay away from hotels and restaurants in our business. Good stuff. Cool. Another one I'm really interested about, and I don't think you and I have had a chance to talk about this before, but I saw that you recently joined Land Bank Advisors, a commercial mortgage brokerage. Can you kind of walk us through who Land Bank is and what the business model is, and how that aligns with your focus and your style and your businesses?
For sure, yeah. So Land Bank was an idea of a partner of mine who had spent a bunch of time in the commercial debt space, and had spent a bunch of time in the private commercial debt space. And the idea was born out of, and during COVID, it was born out of this idea that mid-market developers were really struggling. The debt markets were becoming more constrained, and conventional forms of capital that the mid-market developer in Canada, real estate developer, they just weren't as available. And you weren't big enough to have the scale and some of the expertise and access to more sophisticated forms of capital, but you also weren't small enough that you could pull the capital together with friends and family. And I say capital being the full capital stack, everything from equity, senior debt, mezz debt, and kind of everything in between. So the thesis was Canada really is a mid-market on a whole, and to find a niche to service and provide that full advisory stack, if you will, to mid-market developers was really the thesis. So it's been a bit of a niche, to be honest, where you find the right types of developers where you can provide that complete turnkey solution, if you will. That's been an interesting place to spend some time over the last couple of years.
And now, is your piece of that puzzle exclusive to Atlantic Canada? And I know your partners are primarily Ontario-based, but are you focused on our market out here?
Great question. No, we're not geographically focused as much as we are developer fit focused. And certainly some of the developers we've worked with have been coast to coast, BC through to Atlantic. Many have been in Ontario as well, but more so finding just, can we add value to that developer, and can we provide a kind of more holistic solution to what their project entails?
Very cool. Very cool. And I know a couple of your partners are prominent podcasters themselves, Nick Hill and Daniel Foch. So I know you have some stuff on the go with Nick, or you've worked with him in the past. He'd mentioned it on a call we had. We support them with a real estate investor meetup group here in Halifax. So got to know those guys a little bit. And Nick, we brought you up as a mutual acquaintance, and Nick's comment was that Chuck was the smartest guy he'd ever met. And I thought about it for a second, and I said I couldn't disagree with that statement. So how do you react to that, Chuck? It sounds like a lot of pressure.
I think Nick's the most handsome guy I've ever met. That would be my rebuttal.
Oh, geez. I love that response.
No, great guys. And obviously Dan and Nick are just great real estate minds,
Totally.
great business minds, and have a lot of fun discussing world solutions with them for sure.
Yeah, their pod has certainly taken off, and it's been a major influence too. I know Neil and I as well, and to try to cut into this space as well. But really great to see them, and I'm excited for where their future will take them as well. So pretty cool to have the business association with them as well. So locally here in the market here, so obviously we've seen a crazy growth in the Atlantic market here, bigger than we've ever seen in our lives over the last 5 years. Would you say we've kind of touched on this already, from maybe a rental unit perspective in terms of where the rent's being maybe maximized now, but do you think our market here is overheated currently?
I think to answer that succinctly, I don't think it is overheated. I think we have some inefficiency in that supply chain. So I think it's more of a timing issue. I'm bullish and probably bordering on bias towards Halifax, towards Atlantic. I think we have a very great quality of life here throughout. It's a wonderful place. I mean, you can work downtown, live at a house on a lake 25, 30 minutes away and still have a cottage on the ocean somewheres and drive there in an hour after work. I mean, the livability, notwithstanding the increase of cost of living that we've seen over the last few years and some of the, the logistical challenges that we have in the city, those are growing pains. But yeah, I think when you distill that all down, the quality of life here is stellar. And I don't think that's going to change. So I think we're going to continue to attract people from outside our country, from outside our province, from outside Atlantic. I think we're going to continue to attract businesses as well. I think Halifax has benefited over the years of kind of being a hub city. And I think we're starting to see that shift, though, in the sense of Halifax starting to stand on its own. It's kind of hit that tipping point as far as an urban center goes. We've always had a lot of the right ingredients, lots of universities, lots of innovation, lots of young people. The key has always been making sure that they stay, giving them a reason to stay, giving them employment, giving them great places to live, great things to do socially. I am bullish on the long term. I think we're just getting going. I think, cliche, the secret is out about the East Coast, but yeah, I'm definitely I'm here for the long term, and I see a lot of growth in the future.
Yeah, I largely agree with you there. I'd say I'm very bullish and probably biased too. At least in the single family space, without a doubt, I think there's going to continue to be huge demand in Halifax locally and in Atlantic Canada in general. You look at the relative price points to other major urban centers, we still have a lot of value out here. Despite the growth we've seen, and maybe we are capped from a multi-unit perspective from topping out a rent, but like you said, it's probably likely plateaued. So, do you have any opinion on where we'll see values go with recent rate cuts and probably more coming in early 2025? But any opinion on where we'll see values next year?
You know what, I don't think, at least in Atlantic, our values have been terribly sensitive towards interest rates. You look at, as interest rates went up, cap rates didn't move in correlation, and I think. Again, I think that's a function of the timing of the market and call it the institutional capital taking a longer term perspective. So these ups and downs we see over kind of a 2 to 5 year span doesn't really have as much impact. It's those bigger factors of, is this a desirable place to be in the long term? And I think it is. I think we're growing economically, and therefore we'll continue to grow population wise. So I don't think we've capped out. I don't think interest rates as well, though, are going to drive significant. I don't think that's going to offset some of the challenges we're going to have over the next year or two as our supply chain and our kind of population settles again, if you will. So I don't think interest rates going down will offset that. I think we'll just see steady state. We just won't see that same really strong appreciation that we've seen. But I think there's a lot of value creation opportunities. I think you're right with single family homes, building, the construction industry is going to continue to do really, really well. I think it'll shift a little bit from the massive push that multi-res density had to other kind of lower density, mid-rise, more creative kind of rural development, which fortunately we've got lots of green space around the city. So between here to Truro, that corridor, I think there's a lot of interesting development potential, and we'll continue to see that build out.
Very cool. Very cool. So let's dive into investing in private mortgages. Okay. So I know you've obviously been a fantastic supporter of us at Keystone and us getting ramped up here. but I'm curious, what do you love about, obviously the return is great, but what do you love about investing in private mortgages? Anything specific?
Yeah, I think I probably like the same things about private mortgage investing as I do investing in a business, investing in whatever it may be. It's fun to help play a part in enabling the creation and growth of something. And
Mm-hmm.
so when we're private lenders in a real estate deal, we play a very small part. We're a sliver of that capital stack, but hopefully an important one to
Mm-hmm.
help enable that developer to accomplish their project, whether it be acquire a piece of development land, start a construction project while they're waiting for some slower
Sure.
conventional financing to
Yeah.
get going,
Yes, of course.
or ultimately bridge that gap towards the end of their project where they've done all the right things. It's a great project, but the reality, unfortunate reality is things often take more time and more money to finish in this day and age. So being that bridge, I mean, those are important roles to play. We like to do it with great developers who have a clear vision and have a clear path to get there. Very often it's called bridge financing.
Yeah,
And
of course.
the last thing we want to be is a bridge to nowhere. So
Yes.
yeah, we really like it. Excites us when we can be involved and play a role in helping realize that development,
Yeah.
whatever it may be.
Very cool. Anything that makes you nervous about these investments?
Yeah, probably the opposite of what I just mentioned. The deals that we say no to most often are because we can't get comfortable that the developer either has the financial wherewithal, they're not getting enough capital to get them to that next value threshold and plateau where they can refinance or take out or whatnot, and or they don't necessarily have the prior prerequisite experience. They don't have the right human capital.
Yep.
Those would be the main reasons we say no.
Yep.
We can't do it, because the last thing we want to do is again bridge to nowhere. That doesn't benefit anyone.
Sure.
So those things make me nervous. More macro is liquidity. Like, where is the project and what's the optionality? What happens if things do take longer? What happens if the rents are a little softer? Is there some robustness to the underlying project and developer? Can they afford to hold their breath to get the project done? Do they have other options, tenants to move in, et cetera?
Yeah.
We understand that there's an inherent unpredictability about business and entrepreneurship, and real estate's no different. It's a bit more predictable than some other businesses, but ultimately you can model the heck out of something and still not get every variable
Shit
right.
happens.
So we want to see a bit of robustness with those projects and developers, and that's the offset to the liquidity risk.
Yeah. Would you say you guys have a preference or bias towards developers you've dealt with in the past, or that you have some knowledge of their track record? Or are you guys open to, and I'll be perfectly transparent, we do both, right?
Yep.
Like we'll invest with someone we've had in the past, but we'll also take a chance on someone, and we're rewarded for that risk in terms of the return as well. But would you guys have a preference one way or another?
That's a great question. We're fortunate that we do get to work with a number of, call it, repeat customers, and that's great. That's great. Sure. Because we usually have a confidence in them. Yeah. We have a familiarity with what they do, how they do it, and their ability to execute. And I think in business, relationships and people are number one. I think that's especially pronounced when you're doing any sort of alternative investing. You're relying really heavily on that person to execute. And so we spend a lot of time getting to know them, and it really is more, it's story lending.
Sure.
They have a narrative, something that they think they can accomplish. So the better we know the individual or the company, certainly the easier it is for us to get comfortable. But on the flip side, we're always, I think part of what we do, and the opportunistic part, is we're always looking for developers that are doing new things and growing, because those are usually people that are looking for capital and looking to grow and need that extra stack. So it's probably split 50-50. I love hearing and meeting a new developer just as much as I do looking at a project for someone that we've already worked with. Both are rewarding, and those new customers become repeat customers. So totally. It's fun to work with both for sure.
Awesome. So a couple more before we wrap up here. So do you have any advice for entrepreneurs early in their career about setting out in that exciting environment?
Yeah, the most formative and most impactful piece of my kind of career as I look back at it to date, and really a big catalyst for me getting into entrepreneurship was mentors,
Hmm.
having mentors
Yeah, yeah,
and varying mentors. But I would really strongly encourage anyone that's thinking about maybe has the itch of entrepreneurship or a curiosity. Go find someone that's done it. Find someone that runs a
totally.
business. Find someone that has done something, whether it's in an industry that you think you're interested in or not, is really that's less meaningful than someone who has actually gone and done it. I think
Sure.
entrepreneurship, more than any other discipline, is really hard to teach academically, although St. Mary's has a wonderful entrepreneurship program. Um, it's really hard. There's a lot of intangibles. And so, finding a mentor to help educate you, help expose you to, what is entrepreneurship
Sure.
is super important, but also really important because if you get down that journey of going into business in some way, shape, or form, for me, mentorship, they give you knowledge that otherwise it would take you years to collect and
Yeah.
gather, but they also give you the confidence to take that leap. Like
Yeah.
at some point in entrepreneurship, there is a leap that you have to take. You can only model things so much, and if there's no risk, there's probably no
Yeah. Yeah.
reward.
Yeah.
But having someone that's been around the block saying you can do this, like
Yeah.
go after it, and you'll figure out what comes next. I think that mentorship piece is a really unique relationship, and I think that that's super important for anyone going into that or thinking they might want to go down
For
that
sure.
path.
For sure. And I know you and I both have had, experience with bigger corporations coming in. I think maybe be a little bit longer than you. It was probably about a decade before jumping into entrepreneurship. But would you place a significant amount of value on spending a couple years with a corporation to kind of learn the ropes? Or do you think it just varies person by person and some people are just ready to jump right in?
Yeah, no, that. I mean, I'm biased. I definitely benefited from the discipline, the rigor, the structure, the expertise that came from being at small and big accounting
Hmm.
firm. So for me, it was definitely the right path. I'm really glad I did that, had that experience. I don't think you can go wrong if you're putting yourself in an organization that has really robust processes. You're surrounded by lots of people and you can work really hard. Like
Sure.
you got to log your hours in
Yeah.
some way, shape, or form, and you gotta get your scars. So if you're in the right organization, bigger organization, it can be a really great place to do that. They've got the benefit of established kind of processes, ways to do things, and lots of great potential mentors and people to learn
Totally.
from. So I would definitely. I don't think it's a waste of time.
Yeah.
You want to focus, I think, on opportunities and organizations that are growing, changing, doing something so you can see as much as possible, depending on how long you're there, or you end up staying and creating a cool career in one of those organizations and growing it from within.
Yeah. You also have the layers there to maybe insulate you a little bit from those mistakes earlier in your career, right?
Correct.
So
Yeah.
no downside there. All right, last one before I hit you with a bonus question here, Chuck. So what would you say is next on your career journey, whether it's Novillo or Land Bank or some other avenue you're headed down?
Politics.
Okay.
No.
I hear there's some openings now in the Canadian government.
Yeah. Not sure I'd want that job today, but
I don't know either.
a bit of a cleanup to come. But no, I mean, joking aside, I mean, someday maybe far down the road, politics, and I look
Cool.
at politics maybe as to me, it's leadership. I am passionate about Atlantic Canada, passionate about Nova Scotia, and I think that I'm not a terribly political person, but I just believe that we have an obligation to try to help our community grow, improve, and be better. That's a story for another day. In the near term, it's more of the same. Want to invest in more great Atlantic Canadian opportunities, want to acquire great Atlantic Canadian businesses and help them grow. So it's really doing more and bigger and further and faster and all that good stuff. But also all along the way, just trying to enjoy it because it's a very unique, privileged thing I certainly get to do, working with lots of wonderful, brilliant people, and help see things grow. That's the best job you can have. So it excites me every day.
Very cool. I'll be watching for your face out there in the future. All right, last one. We like to hit our guests with this bonus question. Okay, it's a pretty tough question. So I'm not sure if you're a pizza fan. But I'm going to ask you, what's the best pizza in Halifax?
Right now, what by volume, the best pizza is Lou Picou. That's my.
I've tried that recently.
It's very good.
It is very good.
Yeah, that's my go-to of late.
There's a markup on the pricing there, I noticed, but fantastic quality for sure.
I noticed that too. Like any good quantitative person.
Totally, yeah. That's an interesting one. I don't think anybody's answered that one yet, but my go-to is yes over here, being a Dartmouth guy. But Lupicu, good one, good one. Really like it. Anything else you want to add before we wrap up?
No, really appreciate the opportunity to work with you guys, support you guys, and appreciate the opportunity to be on today.
Yeah, great to have you on, Charles. Really appreciate it. And thanks, everybody, for listening. Catch you next time.
Thanks for listening, guys. It's Neil, your co-host and co-founder at Keystone Mortgage Investment Corp and Director of Investor Relations. I'm also a real estate agent, real estate investor, and business owner.
And your co-host and co-founder of Keystone Mortgage Investment Corporation, Ryan McNeil. Keystone MIC is licensed under the Mortgage Regulations Act of Nova Scotia, license number 3000844, and through FCMB, license 89280. Keep in mind, the views of this podcast are for informational purposes only and are not financial advice.